Yeah, don't sell in a falling market is really the answer. I mean, it's pretty straightforward. I mean, a lot of people buy property, they add value to the property, so extensions, interior design, etc. One thing people are doing nowadays, which they wouldn't have done in the 80s and 90s, is they're buying property that has curb appeal and has internal appeal. So years ago I was asked, would a conservatory add value? And the answer would always be, well, for every £1,000 you spend, it's a year you've got to stay in the property. Those days are gone. So there are lots and lots of things you can do to add value to a property. Interior designers, I would recommend you all have one in your back pocket that you can speak to at any given time, because it makes a massive, massive difference. Young first-time buyers will pay for the work to be already done. So the dream that they've got in their mind is in reality. That's why developers build beautiful show homes for you. Okay, so if you're looking to buy something, spin it on, then furnish the property. If you want to rent the furniture, you can do that. We've got a rental company we use, which put the furniture in for you short term, take it back out. You can do kitchens and bathrooms, that sort of stuff, but you can only do that if you're adding value. And the best thing to do is have an estate agent you know that you can speak to. So when you're buying through Tom Smith estate agents, you want your own estate agent. So you're going to bring someone and say, look, James, I'm buying a property in Reading, it's not through you. This is the property, what do you think I should be paying for it? What do you think I should do with it? Do you mind coming along? So I'll go and do lots of properties with investors and turn up like dad. Used to be their brother, but now they're dad. But yeah, that's the sort of thing you can do. But just know you make your money when you buy. You do not make your money when you sell. So remember that. So knowledge is everything. Okay, so that's the best thing I can say. If you're looking to keep it, then obviously the property has to fit your strategy. So whatever your strategy is for the long term, stick with the strategy and don't change. The market doesn't care that you need the money quickly, and it wasn't your strategy. So if you've got 3 or 4, 5 year plan or strategy, then stick with it. If the strategy is not working, then make sure the property is adaptable to change to another strategy. Okay, you'll hear lots of buzzwords, lots of people around the country, but just know what you're doing and stick to an area you're comfortable with and you know the area. Okay, and if you're buying family properties, make sure you're in good school catchment areas. Okay, because 75% of buyers will move because of schools. Simple as that. Okay. Sorry, I talked about that.
Thank you, James. I'll let you read this one out, Andy.
Okay, I'm a UK citizen living in Asia with a rental flat in England. It's been rented out until September this year. Now I am selling it. Question 1, does my non-resident status mean I can avoid capital gains tax on the sale? Answer is no. To be honest, it used to be, you could. We changed the rules, and the government changed the rules. 2015 budget. Basically, it was trying to widen the tax base. We had a situation that non-residents didn't pay tax on UK property. And we basically changed that, so anybody who's non-resident, they do pay tax on the property, but it is based on the growth of the property since April 2015. And to answer the other questions, are addition not paying CGT? No, it's still taxable. Also, as far as a non-resident is concerned, they have to notify within 30 days they've actually sold the property. So, not a problem with that. And do I have to remain outside the UK? The answer again makes no difference. If you're non-resident or UK resident, you do pay tax when you sell UK property.
Thank you, Andy. Gareth?
Yeah, so there's a lot of speculation what will happen with stamp duty and landlord tax relief in 2017. What do I think will happen? Well, I prefer not to dwell on these things, okay? I'm sure we've all heard the saying that 2 things in life are certain, death and taxes. The government are forever playing with the tax merry-go-round in some way or another. So, as a business owner, a property developer, an investor, these taxes come along, and you've got to be in a position to be flexible enough to say, okay, well, this is a new tax that's going to affect me. How am I going to change my business strategy to deal with this? One of the things that tends to always happen when there is a new tax that's introduced is a whole wealth of exemptions that are applied to the new tax taxes that are being put in. The devil is in the detail. So, a really good bit of information to share with you this evening, okay, is to go away and have a little look just into Google HMRC, stamp duty exemptions. For example, there's exemptions for property trades. There's exemptions when you're buying property from a deceased person's estate on the new stamp duty, the extra 3% and so on. So if you have a little look through it, actually you might find that there is an exemption that applies to the property that you're actually looking to buy. I think sitting down saying, well, is the 3% going to be there or not? I mean, personally, yeah, I think it is, but somebody in the room might say, well, actually, no, it's not going to reduce to 1% because we're making it up for a chancellor and so on, all the rest of it, and that's different opinions. Well, great. I think the thing is, you've just got to deal with what's in front of you and be flexible enough to adapt and change when things come along like that. So,
Great. James, back to you.
So, whilst factors such as interest rates, lending volume, and financial industry liquidity have a significant effect in possibly creating correction, would it be fair to assume that Brexit may have been the catalyst for the 2017 dip? We're not in 2017 yet, so it hasn't happened yet. Or could we expect a further second decrease in property values? I asked this question an awful lot, and I think who's heard of the phases of property? Anyone heard of the phases? So you've heard the 9-year phase, the 8-year phase, the 14-year phase. Yeah, Mark highlighted that earlier. I mean, phases are phases. They are what they are. There are 4 phases. There's a phase where people will start to buy casually. Then there's a phase where people will buy a bit more aggressively. Then there's the frenzy phase. Then there's the crash phase. Okay. The question is really is where you buy your property, because I read the national press all the time. I've lost my mic, sorry. And you can't read the national newspapers. I think everyone in this room is here for a reason, and the reason is to get educated. So I'm not trying to flog anything to anybody. Knowledge is power, and I think if you choose your areas correctly, and you've got to look at economic cycles. In 2008, the market crashed. Now, I run a multi-million-pound company, and overnight, someone took the tap off. It was scary stuff. And in 1992, the market took 6 years of going downwards. And I thought, we can't go through another 6 years of that in 2008, and I was pretty scared. In fact, I thought I might end back up in Great Hollands, but where Mark talked about earlier. But look, the market here did not crash. The market levelled out, and house prices readjusted very, very quickly. Whether you're buying in Nottingham, in Grimsby, you've got to be very, very careful of where people say, yeah, come and buy here. Because investors that aren't educated follow like sheep. And you should be ahead of the line. You should not be behind the line. So then now is the time to be buying. The reason being is that in the last 4 to 8 weeks, there are more properties in the market in Berkshire and Surrey than there have been in the last 8 years. So it means that properties are taking longer to sell, which means that vendors are getting more desperate. So the question is, if you're a seller that is sold and bought the wrong time and you're selling now, then it's not a great market. If you're a buyer and you've got cash in your pocket and you've been able to wait and wait, then now is a great time to buy. The cost of money is nothing. When I started an agency, it was 15% interest rates. 15%. If I say to everybody in this room it's 15% tomorrow morning, you'll all walk out. So, and if I said to everybody 10 years ago the rates would go down to 3% or 2.99%, get HMO for under 4%, everyone would have bitten my leg off. So, predicting the market is quite easy, but phases relate to very localised areas. So, my advice is to choose your area very, very carefully. Brexit will not be an effect until they sort Brexit out. Simple as that. So don't worry about Brexit. Don't focus on the problems. Don't focus on the make them told me this, told me that. If I don't tell my mechanic what's going on in my car, I just rely on him to fix it. I don't care what's going on underneath it, just fix it. So, you know, get your knowledge today, make your own minds up. Don't be the sheep. But if borrowing is cheap and house prices, if that house you could have bought for 250 last month, you can now get for 220, and it works with your strategy, and it gives you £900 in your back pocket each month, and by the way, in 10 years' time it doubles in value, is it a good deal? Of course it's a good deal. But if your uncle's cousin's mum says to you, oh, the market's crashed, I read the Telegraph last week, and you go, yeah, I'm not buying, and then all of a sudden everyone's buying again. I don't buy when everyone else is buying. I buy when no one's buying. Okay, I make money at the beginning, not at the end. So that's my advice on that.
Right, Andy?
I will stand up. If I spend thousands of pounds on a refurb on a new property purchase, and I'm claiming these funds against income tax or just capital gains tax? It's a very, very interesting question. It's a question which you get asked on a regular basis, probably weekly, to be honest with you. It really does depend on the sort of work you've carried out on the property. It's based on case law, and it's quite old case law, so there's a bit of a history lesson coming up. There are two cases to think about involving repairs for a property. One is a case called law shipping, and law shipping was where a company purchased a ship to charter, and the ship was in a very, very unseaworthy condition. And the courts found that the cost which spent putting the ship back into commission was capital, because without spending money on the ship, it would have sunk. And that's where I think about your property. But I'll also give you a contrasting case on the other side, which involves Odeon cinemas. And this goes back to just after the war. Odeon purchased a number of cinemas from other cinema operators, which were in a reasonably dilapidated state, but the cinemas had still operated throughout the war, albeit they were a bit scrubby, flea pits. And Odeon spent an amount of money refurbishing, putting those cinemas back into commission to the actual standard of the rest of their portfolio. And that's the way to look at it. If you are reinstating something, so in other words, you're buying property and you can let it in its current condition, that you are, it's quite livable, you're not spending things which change the shape of the property, it doesn't change the number of rooms, then you can certainly argue that the costs that you incur are income and not capital. But it does come down to an element of degree. You can't say a hard and fast rule. If the property is very, very dilapidated and nobody could physically live there, then the costs involved are capital, and you only get tax relief on those costs when you come to sell the property under capital gains. Now, one thing I will, sorry James, that was in there. One thing I will also say, just to follow on from that, a bit more sort of this is more a up-to-date sort of advice, which a bit of information that will affect a lot of you in this room. There was a new clause introduced in the 2016 budget. Anybody who is about to sell a property today, which they have rented out at some point, they need to speak to their accountant, because there is some changes to how that profit or gain on that property may be taxed. If you read, I think it's section 517 of the Taxes Act, or the 2016 budget, it's pretty much sad, isn't it? I know. I might be, I'm blocking or blacking on that one, but I think it's about 517. You're talking about how the government is looking to raise tax from you guys, from you Latvia property investors. They may be seeking to tax any gains, not as capital gain, but as income tax. So if anyone is thinking about selling a property at the moment, which they have rented, I think you need to get some professional advice before you actually sell it, so you're aware of what potential position you take.
Brilliant, thank you, Andy. Gareth, over to you.
Okay, so is it difficult to get a buy-to-let mortgage in the current financial market? And where can I find the best buy-to-let mortgage? Okay, the first thing I think when I see the first part of the question is, difficult to get a buy-to-let mortgage is strategies. Okay, if a buy-to-let mortgage, and I just want to expand a bit on that question. If a buy-to-let mortgage and trying to obtain the best one, depending on your circumstances, is the only strategy that you're employing in your property journey, you need to look at further options. I'm just going to go into a case study very quickly, just on an example of something. So, my business is known as the Landlord's Pension. We help people to invest their pensions into property investments. And just notably as well on that previous question I was asked, there are benefits to buying commercial property, of course, because it's the lower stamp duty rate as well, which I forgot to add in there. But we've had clients in the past that have come to us saying, I want to get into the buy-to-let market and so on. I'm looking for the best deal to get into that sector. And actually, when you look at all of their financial circumstances, you say, well, okay, because of your current financial position, you might not be in the best position to actually get the best buy-to-let mortgage that's out there. Actually looking at a different strategy and saying, where else have you got money, for example, in a pension, and actually employing a pension-led strategy to invest into property instead, it might work better because, of course, whilst money sits in a pension, it's not being taxed. To take it out of there, you have to pay tax on it first. And that exact scenario came up with a client where he was looking at getting into the buy-to-let sector, and we said, well, actually, is that the right thing to do for you? Because that's going to result in a huge amount of tax that you're actually going to pay, just so that you can get the best deal and just so that you can go down the buy-to-let route. When actually, the whole game, let's call it, that we're all in, this property game, is all about generating wealth and revenue and income for ourselves. So look at the figures, say, is that the right thing to do? Perhaps is it better to look elsewhere? And based upon the conversations we had, the chap actually decided, well, no, I'm going to keep the money in a tax-free haven of a pension to make my investments into property instead. Where can you find the best buy-to-let mortgage? Well, the best thing to do is to go and speak to mortgage brokers. Obviously, yeah, Gerardo. Look no further than Gerardo. He's here. But yeah, the best thing is always research, isn't it? Look around and try and find yourself the best deals. I used to work in the mortgage market myself for a period of about 10 years, so I know it inside out. The guy that works with me these days helping me with my mortgages, I used to work with him, and so he knows it inside out. But the thing is that I'll still test him with questions and so on myself. So be prepared to question whoever it is that you're working with, just to make sure that you are definitely getting the best deal. Do the research, there's plenty of information out there on the internet that you can look at. Perhaps I could share with you that at the moment the preferred mortgage lender choice for investments myself is on. Another question.
Okay, one more question and then we'll go to the audience. Andy, if I plan to rent my investments out, either a serviced apartment or a buy-to-let, am I better off setting up a company? A lot of people ask this.
Well, actually, the question says for each individual purchase. Good question. Actually, I'd love someone to do that. You want 10 properties, each of one company sitting into it. Brilliant for fees. I think that really kicks on the head realistically, is that compliance fees for dealing with it. Do you really want to have 10 bank accounts? Do you really want to file 10 sets of accounts? Do you want to file 10 annual returns? Do you want to file 10 corporation tax returns? If you're filing those late, you shouldn't get penalties. So I think it's a very, very quick question. Would I do it? No, is the answer, realistically.
What about collective?
Collective, yes, I probably would. Yeah, yes, I probably would. Subject to the circumstances, I have got spreadsheets to explain the situation. I was speaking with Gerardo today, actually. I've got a client, I've actually gone through a scenario, working out the pluses and the minuses. There's a lot of things to bear in mind: stamp duty, corporation tax, income tax, repayments of loans, etc., etc. It's a lot of things to consider, but generally I would say I would seriously consider a company, yes, definitely.
Thank you, Andy. We'll go to the audience. Does anyone have a question they'd like to put to the guys this evening about anything property related? Don't be shy. No,
There's got to be somebody out there.
yes, we have a winner. Well done.
This is about earlier when we said the property prices rise double every 10 years, which has happened in the last decade. So I was wondering, since wages are not changing at the same rate, surely at some point they should do stop to that, or do you think they won't?
You can hear me. I think what the average is every 10 years. I think wages and salary and property prices have got no relationship whatsoever. Supercars will work whatever they work. But, people are getting richer, people are getting poor, which has never changed in the last 150 years. I think what you're going to see in the next couple of years is definitely house prices dipping. So Brexit or not Brexit, I think you're starting to see that already. The number of applicants, all you've got to do is walk through the sales office, how many applicants are registering in your agency in comparison to this time last year? It's simple maths. There's less people registering. It's a great time for first-time buyers because the government are under pressure to do so much for them. So anyone's got children here, then get your children property out as quickly as you possibly can. They'll never get, when you're buying a property, I bought my daughter property. It's a great time for her to buy. But house prices will inevitably, it happens doubled in Berkshire, it's gone up by, in some cases, 300%. So I think on average house prices in the UK double over the last 110 years, every 10 years. But I think the question, that isn't the question. It's not about what the winning lottery numbers. It's about knowing what you're going to do to make money. Yeah? And I think that's the thing. If something happens in the economy, we don't all go to stop working. We carry on doing what we're doing. But if anyone's who's new to property investing, who hasn't got a property yet, hand up. Everyone else has got properties, yeah? So there's lots of landlords in the room. So what you need to be doing as a landlord is looking at your strategies and what you're doing. The definition of an investor is someone that's investing. If you're not investing, you're not an investor. You're a landlord. If you're thinking about investing, you're not an investor. Okay, so think about that. So keep thinking about how you're going to buy more properties, because if I would have bought 10 properties in 1990 when I set up Prospect, I would never have to work again. Yeah, I'd make more money than I make through my businesses. So think about that. What's the value then? So crystal balls. Hopefully the panel will give you a few crystal ball moments.
Brilliant. Thank you, James. Gentlemen?
An accounting person, I just want to find out from an accountant point of view, going forward with the limited companies, is it better to have an interest-only mortgage or repayment?
I would always say interest only realistically. I wouldn't necessarily want to have a repayment mortgage. I do interest only certainly.
Anyone else like to ask a question? Yes, Andy?
So can I ask why? So can I ask why is interest only? I know that the benefit comes from travel investment, but is it an administration?
Possibly, but I think to yourself, why do you want to use your capital to repay debt?
Spread it over more properties.
I think the point is debt is the only thing you don't pay tax on. So that answers your question. Unless the government keep trying to do what they're doing, where effectively they're trying to tax someone.
Bear in mind, of course, limited companies, the interest restrictions don't apply. So the only personally, when there's something mentioned with regards to the changes to the income tax relief from April 17 going through to 2021, limited companies don't apply to.
And also at risk, it's a business, if you know you can pay more, you're committed to paying more, and you have a bad tenant, you have a flight, your outgoing is a lot higher. Why no one would give you? You should always set up an overpayment. You want to, if after 5 years you
way. You pay yourself first, and you're going to be rich enough, pour down something in the room. You pay yourself first.
One more question, Ali.
Similar to the tax issue, on plan and mine, I'm mixing because me and my wife both are all in fact at 40%. So I'll lose all my money from the property which is in our name because of taxes. So seems like better to find a limited company or stay in your name?
Yeah, bear in mind that the problem you've got, if you're currently an investor in your own name at the moment, to getting yourself into a company, that does come with some complications. Because basically what's happening is you're changing the legal ownership. So if you're getting your portfolio from where it is now into a limited company, you do need to take advice. Because also you need to have, if you're incorporating a property letting business into a new limited company, which is an existing business which you've actually got, then you need to have at least a certain number of units to be able to benefit from the tax rollover reliefs into the limited company, which are quite complicated. There's also obviously stamp duty, land tax to consider as well. It may be one of those things that it can be a strategy which you move into, but it may take you a couple of years to get from where you are now to where you want to be. And you need to be careful because if you do it incorrectly, you'll end up with paying more tax than you actually save. It's one of those sort of things. There are a couple of things to actually bear in mind to do that.
Thank you. One last question, Dina.
Thank you very much. My question is to James. James,
I'm scared.
so just imagine you have all the knowledge today, exactly the same, but you have to start your property journey all over again, and you can only choose one strategy. What would you choose? With the knowledge, bearing in mind that you have the knowledge that you have today.
Yeah, that's a great question, and it's hindsight is an amazing and depressing thing. I'll give you an example. Property's been my life since a young age, so I studied property very sadly, so I'm probably more boring than Gerardo and Mark put together, but
Not boring for me.
You're not boring, look at your tie.
Not as exciting as me.
I think property investing, when I started, was nothing. The private rental sector didn't exist. Apart from the odd person, I think. I'll give you an example. I took 5 of my managers into a pub in 1997, I think 98 maybe, or 1999. Mark and Peter, I think, were not there, but I asked them all for £5,000 each, and it was at Christmas time, and I said, I guarantee you, I'll give you back after year 2 £60,000 each. And it was my way, because at the time I was investing and people were asking me how I'm making my money, but I wanted my managers to build wealth, not just through a wage. And if I can make them money, then I'm less precious to give them pay rise every 5 minutes. But and funny enough, after about 5 pints, everybody said yes. Now, the following morning, everyone said no. I carried on doing what I did, but the reality is that night, if I look at those properties that I lined up to buy, and with that £5,000 each, and there was 5 of us, we were going to buy 10 properties. Because 5 of them were no money down deals at the time, and the other 5 I only put £5 grand in each. Those 10 properties would have made them all millionaires today. So the biggest regret I have is why the hell did I set up a business and get sucked into agency, which I've loved, don't get me wrong, I shouldn't tell you all my staff this sitting in the room, and I should have focused on just doing that, but the pure essence is England's a unique market. There are too many people living here, the land mass is too small, and we don't build enough houses. It's simple maths, everything is simple maths. Demand, supply, demand, supply. There'll always be too much demand and there'll never be enough supply. Okay? The government will always stitch us up because the general public don't like to see you landlords, rich landlords, running around in your Mercs, doing whatever you do. But that's anti-entrepreneurial spirit, and Britain unfortunately loves a bit of entrepreneur bashing. That's why you read the newspapers. So There's no particular strategy, just I should have bought more houses.
Excellent. Massive round of applause. Thank you, gentlemen. Okay, so just briefly, Tuesday the 4th of October, our new look in here. Please book quickly, it's going to get fully booked pretty early. We've got the Magna Group.